So this trade has been up 19% since I called it out a few weeks ago, which is a pretty good return. We're going to get into the trade, how I think it is going to do in the near future. But first, I just want to get into the S&P 500 real quick and do a little bit of technical analysis, because if you are in the market or thinking about getting into the market, it is very important to know what the overall indices are doing, and the S&P 500 is the big one. So we have our strategy right here. Everything so far, I'm just going to say right off the bat, is bullish on the weekly on the S&P 500. So we have right here, you can see this 7-period simple moving average and then the 25-period exponential moving average. And for this strategy, or for this technical analysis setup, so long as the blue moving average is above the yellow moving average, it is considered bearish. Or I'm sorry, considered bullish. Sorry, screwing it up right away here. Now, on top of that, you need a directional moving average, right? You need something that is telling you about the overall market. And that is where we have the HA market bias indicator. It helps weed out some of these false signals, and it tells you weakness and a trend of change of reversal, and not just is it above the line, is it below the line. It actually gives you can see here, this bright green is a strong uptrend, and then this is a dark green considering a weaker uptrend. And the moving average, or I'm sorry, the price action can go in and out of this moving average and without it actually changing colors right away. So it helps weed out some of that false signals. It does repaint, so just be careful about that. Then we have the Trendillo, and we actually have it on the logarithmic. So I'm just going to move myself up here real quick. So you can see over here on TradingView, you can turn it on and off. I do like to turn it on and off, but it's really easy to use it on the logarithmic with this setup. So if you're green right here and you have the blue line above the yellow line, you're looking for this line to simply be above the zero line. You don't need too much more than that. You can dig deeper, drill down deeper, but that is the easiest way to use it, and therefore I like it on the logarithmic. You can do something similar. I also use the MACD, right? Everyone knows that follows this channel, I use the MACD. And I'm starting to use it as a secondary oscillator behind the Trendillo. And I just want, ideally, this, let me pull it up here. I want this MACD line to be above the zero line to go long. And I like to use the MACD to see divergences, because if I keep the Trendillo on logarithmic, I can also then just keep the MACD off of logarithmic, and then therefore I'm able to see kind of both at once. So nonetheless, we are all systems go on the S&P 500. Now, it is also important to take a look at macroeconomic trends, just as far as the Fed and everything too. But you can trade in a vacuum and just using your indicators, okay? We can go down to the daily, and then we're going to get into the trade idea real quick. So I'm not going to spend too much more time on the S&P 500. But you can see right here, it is important to note that we are reaching this sort of resistance here. So we're probably going to see some downturn. And then from there, that's where it's important. Are we going to come up and have a lower high, or are we going to come up and blast through a previous high and therefore just creating a higher low, right? So I'll say that one more time. So we're approaching this resistance here. If you were to bring up the VRVP, you would see it sticking out a little bit more on the side here because there is some consolidation. And where does that go back to? Goes back to this high right here, which was just after, it was the high, it was the lower high after the crash, right? So this is an important line. I mean, it would be hard to say that this line isn't going to be tested. So once again, this can come down, this price action. Obviously it can do anything, it can do whatever, but history shows based on chart patterns that this can most likely come down before it goes and gets retested. Now, when it comes down, once again, is it a higher low or is it a lower high, right? Because those two differences are going to determine whether or not this continues. Now, we're going to go to our trade idea that we've been following that once again is up 20% since we started this trade call out. We did start it at about 37 and some change. Okay. 37, I think it was like 43 or something like that. Actually, it was a little bit lower than that because I do know my average cost is like 37.43, and I did scale in at least one time into it. So TQQQ, what are we playing and what is the strategy? Well, it's based on the idea that the NASDAQ is a safe indices. It could definitely see a downturn and it can last quite a while, as any market can, right? So that is important to remember. But it's based on the idea that eventually the NASDAQ is going to reach higher highs. So the difference between the NASDAQ and TQQQ is not much, other than the fact that TQQQ is a triple leverage ETF. So you're tripling the amount of profits you will get when it returns to the previous high. Now, it is a whip and if it returns to previous highs. But again, do you think the S&P 500 is going to eventually return to previous highs? I do. Do we know when? No. You can go back to the dot-com bubble, and you can go back to the S&P 500, or the Great Recession. You can see how long individual companies took to recover. You had Amazon, go down like 80% in, I believe it was the dot-com bubble. It took quite a while, a couple of years to come back, but the overall indices did not take as long to come back. And that is what we are betting on right now. We're betting on the indices. So what I showed previously, this right here, this line right here was when we called it out originally. So we called it out at about 38.69. I think it was, someone can go back. It was lower than that because my dollar cost average is lower than that. But regardless, 132% if you were to get in that time. If you missed it, that's fine because there's other opportunities. We are sitting at right now about 112% if you were to get in right now. Now, these other two, I just wanted to point out, this right here at 27.74 is when this trade setup that I have right here told you to get into the market. And it would have, going back to previous highs, it would be up 220%. And you'd be up even more than 19% right now if you would have gotten into it then. And then this one right here, just showing if we were to go back lower, it's not terrible because if you're under the thesis that the NASDAQ is eventually going to return to previous highs and it goes back down to here, if you were to buy down here at, 1593, you're going to reach highs of 463% once it goes back to previous highs. Okay. So as I said before with the S&P 500, this has the ability to go back down. I've never shied away from that. I've gotten some comments saying, oh, what happens if it goes down? You're just going to be burning cash. Well, real quick, just for one, I'm not telling anyone to put in their entire account. Have a certain amount, right? And two, there's always a risk, of course. I would not pick a specific company to do this with. Necessarily. Well, that's not completely true. I mean, there's some blue chips that you could do this strategy with, but if you look at a lot of the blue chips right now, like Microsoft is at all-time highs, right? Apple, you're not going to have as great of returns to the previous highs, right? Because right here is 191.83. The top is 198.50, right? So you're not going to hit that. Amazon, let's just pick some other random ones, right? Amazon is okay. That could be decent, right? If you think Amazon is still undervalued, we can pick one more. Let's pick Meta. Right here. Yeah, Meta is not too far away from its previous highs, right? Earnings are out of the way as well. So that's just another thing to consider. You're not going to be getting a huge crash based on the last earnings, because it's already out of the way. So TQQQ is a huge opportunity for this. Not telling anyone to get into this trade, which is another thing I want to remind you. These are just my trades. These are just my opinions. I say in so many videos, I try to put it on every video, I just don't always remember. I am just some guy giving my opinion on YouTube, just like every other single person out there giving stock advice or trade ideas or what have you on YouTube. No one knows what's going to happen in the market. These are just my trade ideas. You do not have to follow them. You can just follow along for educational purposes, follow along for entertainment purposes. Doesn't matter to me. Okay. So overall, at the end of the day, this is approaching resistance, and it is also important to keep in mind that this strategy you can downsize or you can scale out as these are hitting these resistances. I'm going to turn this off real quick. As this, let's just say this, oh yeah, I got the drawing on. Well, anyways, whatever. Let's just say it comes down like this, right? And it can do whatever, doesn't matter. You can, as it's approaching these barriers, right? These landmarks, you can scale out here and then scale back in here. Just keep in mind, if you scale out here, it can continue to go straight up or whatever, right? It doesn't matter. So you can't just FOMO back in, right? Because it doesn't make any sense to sell out here and then sell back in here unless technicals are telling you to sell out here, right? Because then you're just losing all this profit, and that's how the market beats you rather you beating the market. Okay, so stick to your strategy. Am I going to sell out a little bit? A little bit, but I'm not going to sell out most of my position. It's just to kind of allow me to load up more as it goes lower, right? So if this continues to go straight up, that is perfectly fine for me, and I'll take whatever profits it gives me with what I have remaining. If it goes down, well, that's just a better opportunity to load up, and it was a good idea for me to scale out of there. So it's all about trading is all about hedging your bets. Okay. It's about risk management. Some people, risk management is, getting into a trade. Oh, it hits 4.5%. I'm gonna sell out and I'm gonna get back in, and that's fine if that works for you, as long as you're consistently doing that, and as long as you're taking profits that at 9%, so you have that 2-to-1 ratio, right? Each strategy is different, and there's a reason why people do certain strategies over another, but neither is necessarily wrong. And with that, please just hit the like button. It really helps out the channel. It's the easiest way to help out the channel. If you want to see more trade ideas, just hit the subscription button, turn on the notification bell so you can see all of my latest content. Till then, we'll see you next time. Thanks.